Midweek stock market update. Brace yourself for it. It's a good one, as it always is. Price earnings ratios, same as before. Everything's expensive. Red is expensive. And it's a measure of the share price compared to the profitability of the company. And if the share price is very high compared to the profits, it's expensive. Energy and banks are not expensive, however. So how have things performed? Remember, with all of this, we are not just looking at the share prices. We're looking at across 10,000 companies when I give this short bellwether update. Valuation, growth, dividend yields, cash return on capital invested, formula used by Goldman Sachs Wealth Management, momentum, Sortino, the average return versus the risk of missing it on the downside, alpha, the ability to outperform the market beyond just being more volatile than the market, price earnings growth. Anyway, all of these other factors. So I just want to let you know it's not just technicals or charts, as some people wrongly think. How have we performed then? Well, it was a pretty ugly week. Okay, Apple didn't do too bad. Alphabet didn't do too bad. Meta, at least it was up. But as you can see from that patchwork, not much was up, and you couldn't really spot some kind of trend, but we'll come to that in just 1 second. Price earnings growth ratios, another measure of valuation. Nothing cheap, not even the energy stocks anymore, because the current share price compared to the forecast in growth in profits of those companies, it's just not there. So lots of red. Meta potentially has something going for it, and of course one or two of the banks. Let's look at the indices therefore. And remember, if you're on my Great Investments program, well, you've had a pretty good year if you started at the start of the year, because that's where we had the tailwinds and the Nasdaq peaked at a 44% to the upside. If you joined in the last few months, we've had to pick and be more picky with our stocks. We had to pick with greater care because, of course, the tailwinds haven't been there in the markets. That's not to say they won't return. It's not to say that being picky is any burden. It's actually not. Now, S&P 500 up 15% so far this year. That's a pretty bloody good year. Like I said, Nasdaq up nearly 40% means we've got a lot of very happy pension pots out there as a result of that. The S&P 500, well, importantly, interestingly, dangerously, it seems to have fallen below that upward trend that it's had in place. Remember, we do look at fundamentals as well. Okay, and what you can see down here is in the top bar, you've got the stochastics, which tend to be a bit more sensitive. We don't use them the way the textbooks do. A bit more sensitive to momentum price movements. In the bottom half, you have got the MACD, which is less sensitive, but more significant and important. So a bit more lagging. And that's why we don't use it the way the textbooks do. And what you can see there is that the weekly one, which is a solid blue line, by the way, the yellow line is its own moving average and has some significance, which I'll explain in a second. That's definitely heading south. So we're expecting more downward pressure in September on this. And might be a good time if you're into that kind of thing to write some options. Out of the money options, October expiries probably in the S&P 500 if you're into that kind of stuff. Now, the dotted line on the monthly MACD, it's still there. And what I suspect will happen is we'll have a month of just sideways movement in that. The danger comes if the MACD falls below its own moving average. And in other words, it's yellow dotted line. Now, you might say, what the hell? If blue dotted line falls below the yellow dotted line, well, actually, they're mathematical measures of momentum. What they're actually measuring, amongst other things, is the average prices and the direction that they're going over the medium and long term in the stocks, and if they're tending to fall or rise over that period. And that can be quite critical. It's a good measure of momentum anyway. The years, it's not the only thing we look at. Don't forget, from a degree of seasonality, September is expected to be negative, and it's going to be, right? Where are we with FTSE 100? Well, it seemed to have found a base now and may well have ended its falls. Let's wait and see. As you know, I tend to focus on US stocks in any event. Now, Apple. Okay, what do we think is going to happen here? Is it not? Well, it seems to have found a base, but is that base going to hold? It's certainly overbought on the weekly stochastic, which tend to be a bit more sensitive. And you can see here, now this is interesting, This is a bit advanced of the S&P 500. You can see that the falls in the weekly have been more prolonged, and you can see the monthly still hasn't fallen below its own yellow moving average, which suggests that you could, with the S&P, actually just have it go sideways without actually falling much, and that will fizzle out and get rid of all the delays, as it were, all the falls that might otherwise have happened, and then it can resume upwards again. Okay, so the falls on the S&P might not be anything severe, because it suggests that Apple is a lead indicator for the S&P 500. Apple is a lead indicator for the S&P 500. It is a forward indicator of that, and if that's anything to go by, then the S&P falls will be limited. And you can see in September, Apple tends to have a negative month just as frequently as the S&P. Obviously it would, and therefore it's not too bad. So reasons to be positive despite falls. That's what the analysts think. Remember what this is. I'll just smallen my face. I wish it was that easy to lose weight. Return potential, if the share price goes up to the average of what the analysts think it could go to from its current level, you'd get an 11%. I don't really particularly care what the analysts think anyway. Alphabet, strong upward moves, all very positive. You sort of have got an idea now how to read these things anyway. Yes, I know we could be going sideways for a while, because if you look at those two sets of indicators and it's overbought on the stochastics, of course we could go sideways. Of course it needs a bit of a breather. But September tends not to be a bad month for the company anyway. So that's where we are with Alphabet. Now, as I've said before, if you put a gun to my head, I would buy now, but I'd rather dollar cost average into that. Same with Apple. Microsoft, similarly with that, put a gun to my head. Okay, I'd buy it now if you give me no option, but I'd rather dollar cost average in, i.e. buy a bit this month, bit next month, and so on. And where are we with this one? Well, again, a bit like the S&P, it's got a similar pattern, but further along the line. So it seems to be a bit of a lead indicator, like Apple is for the S&P 500. You can see how you can have the weekly fall, and yet the share price actually not move that much to the downside. It's a bit like releasing a bit of excess pressure. It goes sideways for a bit, that then falls down, which is great. The price goes sideways, and then we can resume back upwards again. So that looks like the most likely scenario with Microsoft. Doesn't look like it'll fall below 311, which was its recent low. And of course, the month tends to be not too bad for it, and every bank seems to like it as well. 18% to the upside, say the analysts. Okay, Amazon, similar kind of story, except this is upwards on the MACD very strongly. September is rarely a positive month for it, so don't be surprised. And it tends to go sideways. It's going sideways at the moment there. So, okay, that's that one, which, as I say, expect a few more weeks of sideways movements. Remember, you're catching me on this on YouTube and on my Telegram channel every Wednesday and Friday. So in a couple of days, you get another update anyway, okay? There we are with Amazon, 22% to the upside, say the analysts. Disney, I've mentioned it before in previous broadcasts, nothing new to say. Would I buy it at these low levels on the expectation that when it's hit such a level before, it's doubled my money? No, I wouldn't do it for that reason alone. I'd rather wait for that one, even though the analysts think 30% to the upside. All the analysts, with the exception of Atlantic Equities, who are you, are saying buy. Well, I guess KeyBank, who are you, as well, have said buy, but have said hold. So Nvidia, now that looks toppy. I mean, doesn't that look like it's not about to shoot ahead? And you can see here on the monthly, let's draw that on the weekly, you can see downward pressure. You can see this likely to go, and this looks toppy and likely to fall. So if you're risk averse, I better make a note to look at my Nvidia and might if you're risk averse, you'd sell. How much you sell will depend upon whether you think, okay, well, I'll sell all of it, or if you're very risk averse. If you're a little bit risk averse, you might sell 20% if it drops 10% from this level, and if it drops to this level, I'll sell another 20%. If it drops to this, I'll sell the rest of it. You know, you make your decisions based on that. If, however, you're a long-term investor, you'll say, well, I'm risk loving, I'm holding it for the long term. It doesn't matter. I don't care if it does all of this again. I don't care if it drops to here, which it could. Who knows? It could. How do we know otherwise? So that's how you look at things on that. And of course, all the banks are saying buy, 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 buy. and they think it's got 50% to the upside. However, like I said, my biggest worry is it's now starting to look a bit overbought. Might go up that way, but more likely to fall a little bit. But I would do it in tiered steps. If it drops 10%, I'll sell 10%. If it drops 20%, I'll sell another 20%, and so on and so forth. Tesla, not too bad at all. September and October tend to be bloody dreadful for it. These two are going sideways, essentially. Well, side to up, so you can sort of see why it might go along there a little bit. But yeah, all in plan. It was one of our special situations from January, and it's not been too bad. Special situations, remember, are those which don't quite hit all our criteria. However, we say with added risk that these are the projections. We put projections on them and obviously got into Tesla in January. It's worked out fine. Now, Meta, that's what's likely to happen. It's going to make the monthly pull sideways because this is a downward pressure on the monthly. So that'll go sideways. But as you can see with the price, probably going to do something like this. I don't see how it immediately in the short term goes here. So again, if you're writing options or selling options short for October, you'd probably be looking with a fair degree of confidence at around the 330 mark. Okay, so that's Meta. Okay, ServiceNow. Now, similar kind of story, slight worry like we had with the others that the weekly is down and that's going to put downward pressure there. So do expect this to have a bit of downward pressure before it goes back up. And as I've said, September's awful. So let's give September, 10 more days to get out of the way, and every single bank saying buy. Okay, the analyst saying 12% at least to the upside. Now, Cisco, downward pressure sideways here, so not too bad, but this is overbought. That's going to have to work its way lower. Do you see? It's going to have to work its way lower. Sometimes it can still do that halfway, so it can have a sharp fall, then move back up. But one way or another, this is going to go lower before it goes up. Okay, that's how it's going to be with Cisco. Still a good company. Now, all the fuller broadcast is on my private channel on Fridays. Private channel on Fridays, you get the full broadcast. This is the public one, which is shorter. And obviously my clients watch it as well, which I do on Wednesdays. So I hope you enjoyed it. Have a look at my campaign for $1 million. Have a look at the Great Investments Program at alpeshpatel.com/shares as well. My campaign for $1 million explains why, in trying to educate 1 million people to make an extra $1 million for their investments and pensions over their lifetimes, why these kind of updates educate and inform and pass that knowledge on. And thanks to social media, that should be an achievable yet ambitious target. Thank you all. Have a look at alpeshpatel.com/links as well.